Everyone knows that investing can work wonders. It's the only way to break free from the rat race. You can either work till your last breath or find a method to make your money work for you. It's not about having more money than others when it comes to investing or making a lot of money. It's not about bragging rights or getting featured in magazines. It's all about independence. It's about having the freedom to do anything you want, whenever you want, and in whatever way you want. It has to do with not having to answer to a boss for the rest of your life. It's about having the time to do the things that are most important to you. It's all about having enough time to spend with your loved ones. An investment is your route to financial independence. Of course, even if you're a regular person living paycheck to paycheck, you can build a successful business, work on a startup, or do whatever you want. However, this isn't for everyone. The majority of people want to create the next Facebook or Apple. As a result, their only option is to save and invest. The more money they can invest, the sooner they can retire. That doesn't imply they'll spend the entire day at home watching TV. Instead, they will be able to devote their time and energy to more vital endeavors. Even a well-paying work will propel you up the rat race since you will still have to trade your time for money, and your time is limited. You will never have more time than the dumbest person on the planet, no matter how clever or talented you are. As a result, figure out how to make your money work for you. Of course, there are a variety of investment options available, ranging from bonds to real estate to the stock market. And real estate appears to be the best alternative at times. It undoubtedly offers its own set of benefits. Today, though, we'll look at 5 reasons why investing in the stock market is a significantly superior choice. Give this video a thumbs up if you're ready. Let's get this party started. The first is liquidity. If you've ever purchased real estate, you know that it's a long-term investment. You can't buy and sell your home every day. Stocks differ from other investments in that they are liquid. It makes no difference how much money you put into the stock market. You need to sell all of your stocks the next day because you have an emergency the next day. And there you have it. You can convert your investments into actual cash in a matter of minutes. And unlike real estate, you don't have to seek for a month to locate someone willing to pay a third of the asking price. Of course, the stock market fluctuates, and it's impossible to say whether now is the optimum time to sell your equities. The truth is, though, that the drops don't last long. It will bounce back sooner or later. The second point is development. Apart from cryptocurrency, equities are the only asset that can guarantee you actual growth. When comparing stocks to other popular assets like bonds or real estate, they typically grow in the single digits, often less than 5%, and only reach double digits, such as 12%, when the economy is booming, as it was last year when the Fed printed trillions of dollars and pumped it into the economy. While equities can increase by thousands of percent in a few years, the world is always changing. Every day, a dozen new businesses emerge with the goal of disrupting an industry or developing a game-changing technology. In a few years, that company may be worth $1 billion to $100 billion. Where else can you achieve a return of over 5,000% in the last 10 years, 500% in the previous 5 years, 1,000% in the last 2 years than on Netflix stock? That is why the stock market is one of the most appealing investments available. Whatever company you invested in the previous year, you almost definitely quadrupled your money in less than a year. In the stock market, we don't always have years like this. However, investing in the stock market from time to time is definitely the best option. The third benefit is that it acts as an inflation hedge. While the stock market can be enticing with its incredible rewards, it also comes with some hazards. It isn't all rainbows and sunshine. Not everyone succeeds. Companies can also go from top to bottom during a crisis. If you're too emotional to go through these processes, though, you can simply invest in some passive stocks. There are funds that invest in specific industries, such as technology or energy, as well as the country's largest corporations. For example, you've definitely heard of the S&P 500 rate, which measures the top 500 companies in the country. However, reaching a specific valuation isn't enough. However, the company must be profitable for at least a year and meet a number of additional requirements in order to be eligible for inclusion in the index. Some funds also invest in these top 500 firms on a passive basis. So no matter what happens, the fund will continue to expand because, even if one of the companies suffers, the others will grow to compensate. And if the economy expands, the fund will expand as well. The S&P 500 has historically grown at a rate of roughly 10% per year. So if you invest for the long run, you may expect a 10% return, which is much more than inflation. Furthermore, you can liquidate your investments promptly if you ever require that money urgently. Compound interest is number 4. 10% may not appear to be a significant return. Compound interest, on the other hand, can turn $1,000 into $1 million. Consider the following scenario. If you had to choose between $3 million in cash right now and a single penny that doubles every day for the following 31 days, which would you choose? Which one do you think you'd pick? At first look, it appears that the $1 million option is the best one. However, if you think about it for a moment, you'll realize that the penny that doubles in value over the next 31 days is a far better option. And the penny that doubles every day for the first 5 days becomes a single dollar. It rises to $5.12 on the 10th day. Even if you wait until the 20th day of the next 10 days, you will only collect $5,243. If you choose the penny, you're definitely kicking yourself because you'll only earn a little over $5,000 instead of the $3 million that could change your life in an instant. However, if you give it a little more time, the figure will rise to over $10.7 million by the 31st day. So if you start investing when you're still in your 20s, you can benefit from compound interest and become very wealthy by your late 30s, for example. Low entry barriers are number 5. What amount of money do you believe you'll require to begin investing in the stock market? $1,000, $10,000 you can now start with as little as $5. There are stocks with a market value of less than $5. Imagine being able to begin investing with the same amount of money as you spend on your daily coffee. If you compare it to other investments, such as government bonds, you'll need at least $1,000 to get started. Since government bonds start at $1,000, they are a good investment. It's a different thing when we're talking about real estate, since you'll need tens of thousands of dollars to get started. Take, for example, a modest home that costs roughly $100,000. To get authorized for that mortgage, you must first have a decent credit score, and then you must go through a lot of paperwork. Second, finding a good offer takes a lot longer than it does in the stock market. You must physically inspect the property and be certain that you will be able to rent it out once you have taken out the loan. Third, you'll need to put down a $20,000 deposit just to get started, then pay for insurance inspections and other charges as they arise before you can start renting it out. And if you make it through all of that, you'll need to use your charm to find a nice renter. When it comes to the stock market, all you have to do is pick up the phone, register, and begin buying stocks. To suggest that real estate is a lousy investment is an understatement. However, if we're talking about entrance hurdles, the stock market has been democratized in recent decades, making it quite easy for anyone to begin trading in the stock market. If you like this video, please subscribe if you haven't already done so. Thank you for watching, and I'll see you next time.